Good afternoon. This is Oliver Slow, Blue Line Futures, with another episode of the 2-minute drill. Yesterday we touched on corn and soybeans. Today we're going to touch on livestock. So switching gears up a little bit. Before we get into the charts, I do want to remind those of you who are not subscribed to our YouTube channel, head over to YouTube, search Blue Line Futures. Give us a follow and turn on that notification button as well so you get updated videos from our team throughout the day. We put out a lot of great content, not just in the agricultural space, but also precious metals, energies, indices, etc. We've got a great team in-house that puts out a lot of great info. So again, we love the follow and appreciate the support. Follow us at Blue Line Futures. Now that we got that plug out of the way, we can go ahead and get into the charts. Julie, go ahead and get that shot clock started. All right, we've got the April live cattle contract pulled up here, and live cattle and feeder cattle. That's been something that we've been asked about a lot here over the last several weeks. We had this big breakdown on August 1st and August 2nd, and really just kind of continued to bleed lower through the month of August. Well, September was a completely different story, almost night and day, where we just had an uninterrupted rally back to this original breakdown point, which is where prices lay today. We're a little bit overbought in the very near term, and back at the breakdown point, I think that's an opportunity for people with downside risk to take action. How do you do that? Well, futures is certainly one way to do that. I think options are a great tool in this environment as well. Looking at the volatility measures for live cattle and feeder cattle, we can head over to cvol.com, which is a CME CVOL index. It measures volatility. Here we have live cattle and feeder cattle CVOL. And you can see we're basically at the lower end of the year's range there. So volatility relatively low makes options a little bit more reasonably priced or cheaper, so to say. So if you're looking for downside protection, or through the month of August you were saying, hey man, I wish I would have had something underneath the market to at least establish a floor, and this would be a good opportunity to maybe revisit some of those options. And yes, that is pun intended. So looking for the market to maybe stall out and consolidate after a heck of a run back higher. If the cash market and outside markets do continue to firm up, you could see additional upward price momentum. We get out above 190. You're looking at 192 as being the next upside objective. I think the cash and the outside markets are going to have to accelerate higher for that to happen. I'm not so sure that they will in the very near term. So again, I think this is an opportunity to look to the short side, whether you're hedging or even if you're speculating. So that should be right at about 2 minutes. If you've got questions over what options to look at, or even trading futures, feel free to give our team a shout. My direct line, 312-837-3938. You can also email Oliver at bluelinefutures.com. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.